All right. It is Monday again. It's been 3 Mondays. I have been distracted by, it was Christmas, and then there was one skiing holiday. There was another skiing holiday, and then there was a bushfire, and I had to evacuate. But here we are. I'm happy to spend some time with, in my opinion, two of the absolute smartest brains when it comes to looking at MicroStrategy, which in my opinion is going to be the likely the by far best performing stock on Wall Street the next 15 years. Of course, there can come some outliers, some new company that goes IPO, it has a great return. But MicroStrategy to me is a rare combination of something that I expect is both very, very safe investment, but also will give a very, very high return. Like this is once in a lifetime, in my opinion, investment opportunity. I'm not gonna lie. So because I had to evacuate my home Tuesday, went back Friday, drove up with police, saw the house was burned down, and then I've gotten so many messages, loving support on X and text and everywhere. So I am not at all on top of MicroStrategy. Usually I see all MicroStrategy, True North, which is the wonderful show with these two guys and many other smart brains, Wednesday evening. I think it's 7 p.m. PST Wednesday evening. Haven't seen that. Haven't watched my MicroStrategy today or the daily or any of that. But I know that that Saylor announced 2,000 more Bitcoin today. I was expecting at some stage it would start coming back up after holiday. But anyways, that's the story of MicroStrategy Mondays. Welcome, viewers. Thanks for being here. My name is Anders. These are the two smart people, Ben and Jeff. Guys, how are you? Welcome.
Fantastic. Happy to be here. I'm sorry to hear about your housing situation, man. That's just totally horrible. I mean, horrific. Like, I appreciate you sharing your story, though. I mean, this is like totally real life, and it kind of hits home, right? It's yeah, unique position. I mean, luckily, I think the MicroStrategy has been relatively benign last couple of weeks, all things considered. So I haven't missed too much.
There was days where I didn't even see the price of Bitcoin. Like maybe I looked once, or I think honestly, the first days of the last, 2 cycles that I've been here, I didn't even know what the price of Bitcoin. I didn't even think about it. But just to add to that, and I've been clear about that throughout that. First of all, I'm super grateful to be alive. There are people in much worse situations. It was a rental, right? So, but I had my personal stuff in it. So I'm good. The way I look at it is like same as when I got diabetes decades ago. Like some people get cancer and then they die. Like I don't have any problems compared to that. So I'm just grateful. But also Ben, good to see you again, man.
It's good to be back. I've been a little checked out as well. People have probably noticed from my Twitter feed. It was pretty slow there for a while, but in classic fashion, I got hit with COVID. Apparently that's still a thing, it turns out. And for whatever reason in my DNA, I am just not wired to weather that very well. So it puts me down pretty hard, but glad to be back. So I kind of turned the corner a couple days ago and I'm feeling better. I did the True North episode and I must have looked like I was on death's door because I had people reaching out with a lot of concern, like, are you going to be okay? And I'm good. I made it out the other side. So here we are, but happy to be back. I also like that everyone noticed that we apparently have a uniform for this, which is, black shirts for this, but
You got it.
See, but mine's a little different though.
Yeah. Wait, that's a great shirt.
If you're gonna go uniform, you got to go all the way, guys.
There you go.
I love
it. I did an interview with Tim Kotzman today. I could put my orange tie on like over my black shirt. Yeah.
How are you? How are you guys doing with the merch? I haven't been paying attention lately. You got some cool merch, right? MicroStrategy, True North.
Yeah, it's going pretty well. It's available on the HODL shop, which is awesome. We've raised a decent amount of cash too, and our plan is to put that back into the community, whether it's sending people to MicroStrategy World or giving away free merch or having giveaways or doing things like that.
I know.
we haven't figured out exactly what that looks like yet, but we're excited. We're excited to do that here in Q1. Yeah, some good things on the horizon.
Awesome. That's
our
awesome.
hope is we turn MicroStrategy world into a party eventually, right? I mean, if we get more of like the Bitcoin community, I know that there's a lot of that revolves around their actual products, right? The BI products, not the equity product, but the parties in the equity product. So the more people we can get there that want to hear about Bitcoin and want to hear about the equity itself, I think we're going to have a good time this year. I think it's going to be a little different than they've seen in the past.
So some of my friends that are just like me and like you are both Bitcoiners and MicroStrategy holders. They've been saying like I should do pleb parties for the MicroStrategy world, like MicroStrategy parties at some of these events. But I'm planning to go there myself. So in the beginning of May, I'm going on this Christian retreat. I think it ends the 4th or the 5th, so it would work with getting a flight onwards to Miami and participate.
No, that's
right
awesome.
on. So yeah, look forward to you being there. I mean, May should be an incredibly exciting month, right? We've got FASB fair value accounting being adopted at some point in May, so we'll see that come through. We'll have some certainty on what's going on politically. We'll be through the first 100 days of the political regime. I've heard some noise about 1,200 executive orders within the first week, which is just like totally crazy. If you think about like a strategic Bitcoin reserve, if that's one executive order amongst 1,200, I'm imagining Donnie T just signing a paper, taking a picture with it, onto the next one, sign a paper, take a picture with it, onto the next one. So it could be as something as simple as, strategic Bitcoin reserve happens in 10 seconds.
That would be, it's a no-brainer. It would be smart for US to do it. It would be good for Trump. Well, I guess we'll have to see. Politics is, I guess, to some extent politics, and you never 100% know. But I, for one, I'm just a foreigner here in this country. I am very excited for the next 4 years of America's future. I think a lot of things are going to be set straight, and I think it's going to be fantastic. And then maybe we can avoid situations like the one in Palisades. I often walk by, not often, but occasionally walk by that water reservoir. Is very nearby, and I always wondered, why is it almost empty? Like, why is there this giant cement concrete reservoir with like hardly any water in it? It's whatever, but I don't want to make the show necessarily about that. I appreciate all the support, and that's awesome. So I have one thing I've been thinking about. I started taking notes so it can be a little bit more constructive and bring some value to the show here when I have the pleasure of having the smart guys on. So there's one thing I've been thinking about over Christmas, and I haven't seen anyone talk about it. So I think it's interesting to highlight, and I want to hear you guys' opinion on it. Normally, when indexes they rebalance, let's say a stock is 1% of the index of QQQ, it doubles in the period of the quarter until the next rebalance. But it automatically becomes 2% if it doubles and everything else being equal, because it already went up in price. So there is no new index buying really based on that, as I understand. But it's based on market cap. And I think what people don't really see is that the ATM, what it does is it rapidly expands the market cap of MicroStrategy without the stock price running. So the ATM, because he uses the ATM and the other products, convertible bonds, now also the preferred stock, as I see it, there will be significant index buying to actually chase that higher market cap. What do you guys say?
Yeah, I think you hit the nail on the head. It's got to chase its relative position on market cap. So you're right. All else being equal, if there wasn't an ATM, if that ATM didn't exist, the fact that the price of the stock had gone up would effectively reflect its increased position in the market, in its relative position in the market cap weighted index fund. Now, the rebalancing is important because any future dollars that come in the door are now at that increased valuation. So that's one component of this, right? So any future dollars that come in the door, it's now okay. Now the dollars coming in are at 2%. 2% of the dollars coming in as opposed to 1% of the dollars coming in, something like that. In the glass, Lagavulin, it is in the spirit.
You can say it's smoky.
It's in the spirit of Anders. I wanted to feel Anders' pain a little bit, so I had to go with some smoky whiskey. Sorry.
No, man. We spoke about that. I'm all good. Humor is good. And again, my situation is not that bad. I just don't have a home, but I didn't lose. That's all.
Dude.
But I mean, okay,
it's not that bad. I just don't have a home. But Jesus Christ, man.
The internet's gonna clip this, run around. Everyone thinks Jeff's such a nice guy, and here he is, making jokes at a guy who just lost his home's expense.
Yeah, no, I empathize with your position, man, for sure.
And I will say, I do feel with your pain right now, Jeff, because this one I was wearing it on the Tuesday, right when I was outside. It was around my neck. So this still stinks of smoke.
Oh yeah.
And this one you can't wash it, right? I had a really nice one that I usually wear on MicroStrategy Mondays that I bought together with DJ equipment. But that's now melted, like a bunch, like most of my stuff in that house. But anyways, Ben, you're sorry, go ahead.
Yeah, I was just gonna these fire events. I mean, people don't understand like how scarring it is. I mean, like that's this situation that you've experienced. I mean, you're going to that's a scarring experience, and like some of the smells that you have, like you're never going to forget those, right? Like that's like going to be there forever. So I empathize with how hard that situation. I've done wildfire reinsurance for the past decade, so like I know how crazy this is, and I get like that like feeling when I just see it on the newspaper or in the news or whatever. It's just like, damn, it's crazy. So
yeah. I appreciate it. It's basically like my scarf still, like one is getting better. My favorite scarf is getting better. I've aired it a little bit. This one is enough that when you've been around a bonfire and it's a lot of fun, you're sitting outside, it's like, and then afterwards just everything stinks. That's what it's like. Even now for me, just this one. But anyway, Ben, market cap increase through ATM, extra buying from the indexes.
Yeah, I mean, Jeff nailed it already, right? It is an interesting phenomenon here where MicroStrategy's got this way to continuously build their market cap, even if it doesn't necessarily come with a share price increase along with it. Now, we want the share price increase as investors, right? But it's not always critical to raising the market cap, because when we get things like right now, we've got all of the bonds except the most recent one eligible to convert. Well, if those become outstanding shares here in Q1, that's going to bring another $6 billion alone, just that transaction, to the market cap if they convert those bonds. So it's very interesting what they're engineering here. And I think a lot of people are underestimating that impact. And it's been muted a little bit, right? I think there was a lot of excitement around the NASDAQ 100 inclusion, and people were expecting a significant run, and there were periods and times where I did as well. Well,
but the stock did. It just it was early.
It was, exactly. It front ran. It just didn't pop when people were looking for it in December, I think, when the actual flows were probably coming in. But
yeah,
so I think that's going to sour a lot of people on index flows for a while. But I think that we all have very short memories, and we're only ever one pump away from, forgetting anything that happened. And people also overlook how crazy the performance of that stock was in 2024, right? We look at the last 3 months like that's the only thing that happened that year. You're going, well, yeah, other than the 400% returns, but other than that, that's all that happened. And now it just set us up for what comes in Q1. And I think where they're going in Q1, a lot of people are going to be very happy. And I think they'll be very happy, unless they were buying short-term options, that they made those moves with the ATM, because again, right, when we keep saying the word engineering, they're engineering capacity for more fixed income instruments, right? All that ATM use puts Bitcoin onto the balance sheet that's unencumbered by debt. There was no increase in the debt. So it lowers the leverage ratio. They're down at 17.5%, something in that range right now.
That's what I've got.
And that gives them immediately, right now, they could go issue $3.5 billion in converts with that. So, and people love the converts, but they're not going to stop there, because now they've already said they're doing the preferred offering, right? So we know there's at least 2 billion coming. And depending on how they structure that preferred stock, it is almost certainly just going to be a net benefit to the leverage ratio, because there's ways to structure preferred stock to make sure that it remains in the equity section of the balance sheet and it doesn't have a corresponding liability. So there's things like, the reason why it's perpetual is you can't have an end date to it. You can't have a maturity date. That creates a point in time liability. You can't have any cash redemption clauses within it. There can be no cash requirements for servicing or for paying these off. So you're going to see it only convertible into common stock. These are my assumptions, right? Just take that for what it is. I don't know what they're doing yet. But if I was structuring this, this is how it would look. So you'd have a period of time where ultimately you'll see a conversion very much like we see with the bonds. I'm guessing it looks very similar in structure, that 130%, but you're going to have a longer no-call period on these. But the point is you need to keep the preferred stock acting as equity and only settling into equity at the end so that they can classify it as equity on the balance sheet. And therefore, when they buy Bitcoin with that $2 billion, it just increases that leverage capacity from what they even have today. And they'll just be able to do more convertible bonds. They'll probably be able to do $5.5 to $6 billion of convertible bonds. So they're engineering this and they're being very methodical in how they're doing it. But we're going to see what comes out. I mean, obviously, it seems now, given the timing, that they're kind of waiting for this special shareholder meeting to see what the outcome is. I don't think they need it, quite frankly, for the preferreds at least. They need the raise eventually. There are some questions in the chat here around the raise to 10 billion shares. And the answer to that is, yes, they need it for the strategy, but not for the reasons that you're hearing all the panic voices on X talking about, right? This isn't for one giant ATM, right? That's not what this is for. What it's really for is to accommodate future stock splits. And so when you start doing the math on stock splits, you realize that even them getting to the 10.3 billion common shares doesn't really even allow them that much flexibility for stock splits, right? We just saw a 10 for 1. If the price runs again and they want to do another 10 for 1, then after that, I think they're capped at maybe one more 4 to 1 from there. Yep. And obviously they could break it up into smaller ones, but it's not as crazy as people think it is. And they want to keep the share price accessible because it keeps the liquidity in the stock. So it's not something to be scared of. But they also have 5 million shares outstanding that they can use for preferred stock right now. So if they price the preferred at 1,000, they could easily issue a preferred stock offering right now, raising that up to $1 billion. Same thing. It's to adjust for stock splits along the way and how that trickles down into the preferreds as well. So I think they're just getting set up very cleanly for Q1, and we're just going to see a ton of fixed instruments come out in Q1. I'm guessing 8 to 10 billion. So a lot.
Yeah. And if some of that convertible debt rolls over, I mean, there's 4 billion just right there, right? If you, that 4 billion of convertible debt that's already in the money, if that converts, they're not going to walk away from the deal, right? They're going to sign right back up. Like, I want the next one. And they may even have a right of first refusal on future convertible debt issuance as well. So, I mean, the fact that most of the debt that's set to potentially convert is also years from expiration is also pretty fascinating. I mean, most of the convertible debt in the market doesn't actually convert into equity. So this is one of the few sets of convertible debt that would be converting into equity that continues to be lucrative into the future.
Yeah, and we've got 3 for sure, right, that are basically in the range where they're going to be trading like equity at this stage, right? You got the 2027s, and that's 1.05 billion, something in that range. You've got the 2028s, which are 1.01, something in that range. And then 2030s, another 800 million, right? So now you roll just those 3. If you just roll those 3 off, right, you can start to see that capacity for new offerings being issued. And to Jeff's point, because this is relationship based, right? It's very different than what we're going to see in the preferred, because the preferred is going to be a public offering. So that's different, right? They're not necessarily directly finding the buyers that they want for those. That's going to be up to the market, which is why when I said I think they'll price them at 1,000, it's because I think they're trying to lure in the pensions, the insurance companies, the endowments, those types of buyers. Whereas the convertibles, these are all tied to private placements. This is relationship-based business. So if they can tell these people, hey, if you roll these off, we'll get you into this next offering we're doing right now, where they basically just get to roll out of one and roll right into the other, and they get the ability to reset their delta so they can get back to gamma trading, that's a win for them. But MicroStrategy wants them to convert on their own, because if they have to force it, and they can only force it with the 2027s right now, if MicroStrategy forces an early conversion, they technically owe them more shares for the bond than if they elect to, voluntarily convert. So there is some nuance there in terms of doing it. So it is a waiting game, but I think that they'll lean on the relationship side of this to say it's good for us, it's good for you. Let's keep doing business to get these guys to convert these.
So do they have an incentive to not convert? And if you're talking about the relationship part, I guess that it's so lucrative for these bond buyers to be on the good side of Saylor and his team. So they want to get the phone call and say, sure, you guys can have 2 billion more. Right? You want to be friendly with MicroStrategy.
Yeah, totally. Right. I mean, these are the best performing bonds on the market. So you want to keep your access to that capital. And so if they stay on the good side of this, and, we get a little cavalier on the internet sometimes, thinking that Saylor's out here just dictating and ruling with an iron fist on all these terms for these bonds. But that's not reality. This is a very relationship-based transaction for these guys, right? It's good for the buyers of these bonds. It's great for MicroStrategy. It trickles down. It's good for the shareholders, right? So everyone wants to, stay aligned on this one. And it's kind of like they always say, you've got to deal when everyone's a little unhappy, right? I think that's kind of what you get here. But when you look at these bond buyers, if they want to be in the next round, and then particularly if because of the performance of the most recent one, they might even want to upsize their allocation in the next round, right? There's flexibility there in terms of how MicroStrategy can allocate the issuance of those bonds. So yeah, they're absolutely incentivized to play ball and not try to, stick it to Saylor, because again, private placement, right? And that isn't where he has to place them. He can make a change. There's probably no shortage of buyers for these. I think when we talked MicroStrategy at the party at Sharish, I think he said that they had like 100 participants in this most recent one. So they're
not a small number.
Shortage of buyers that are showing up at the door for these. So they are incentivized to be nice and make sure that this stays a win-win transaction for everybody.
Gotcha. Go ahead, Jeff.
Yeah, just a couple things that are interesting to me in that realm is if the preferred stock has dividends, that also opens up a whole new set of ETFs that may be buying MicroStrategy stock for the dividend nature of it. So again, more potential flows. Additionally, a lot of people have said, oh, they're doing preferred stock now because there's nobody's willing to give them convertible debt anymore, which is just completely wrong, which is just so wrong. It's not even funny. The convertible debt market is absolutely massive. The debt market is absolutely massive. And then it's so big that new companies have started coming out with funds for Bitcoin-backed bond convertible ETFs. To put this in perspective, all of the convertible debt that they've issued currently has been private placement, unrated convertible bonds. So this is like the if you were to put it next to like Microsoft, A-rated bonds, like the pool of capital that wants to buy Microsoft A-rated bonds is like massive, huge. But the pool of capital that's able to buy unrated convertible debt on like an equity is very small. So they can start to structure these in different ways. They could start to get rated. They could start to go to public entities. You've got these new ETFs that are being created to buy this convertible debt, which the public is very interested in buying these, right? There are many types of companies that would be interested in a product with reduced volatility from Bitcoin, but still getting that Bitcoin exposure. So, I mean, this thing is just taking off, and people think that the preferred stock was because they ran out of buyers in the convertible debt, which is just so wrong. It's not even funny. Like, it's the most.
Can I say, Jeff?
Yeah, go ahead.
Can I say it was so wrong that it's what we on Bitcoin X call highly regarded?
Yeah.
So
Exactly.
Back to you.
Yeah, that's basically it. Is you know, the scale of capital that they've yet to tap into is just so freaking massive, and
right,
like it's hard to put it in perspective unless you operate in the financial world. And I was talking to somebody earlier today. It's like most people aren't going to get MicroStrategy because you have to understand like scale of finance and the alternative capital world, and like the other types of financial companies that are in the world and how they operate. And you have to understand business and all of this other stuff. So, yeah, some people just aren't going to get it, but that's kind of why we're here talking about it, because there's literally so much to talk about. It's a complicated trade just in general.
Yeah,
no, absolutely. And it is so exciting to see. And I think all three of us were watching the Q3 earnings call last year. It's only like 3 months ago, and that was really the kickoff of like, all right, this is how we built the engine. This is how we're gonna attract and have products for the different types of financial product demands, and what a Q4 it was, especially like the first 2 months or so. I just want to quickly touch upon so not generally, but kindly had a question that I just want to answer real quick. If you're not a day trader, is MicroStrategy good for long-term to hold? And that's kind of what I wanted to say early on here. I did say early on in the show that I consider MicroStrategy to be, it's not financial advice, to be a very safe investment that is going to give a very high return. And it's like buying maybe Apple in the 80s for like 15 cents. It's something that I think people should overthink, but like I try myself to buy and accumulate and then hold it for forever, basically, or as you need funds. Real quick, so Plan Marcus here, he found the red balloon. Now, this was a meme that started when we started this YouTube channel, me and Puppy, Toxic Happy Hour, in 2020. Plan Marcus would find the red balloon, and he's the only one to found it, and he found it. So there you have it. All right, back to you guys if you have something written down or further.
Well, the community irresponsibly long. I when I think about irresponsibly long, what that means to me is that's a timeline. long is a time frame. In my profile, it doesn't say irresponsibly leveraged long. It says irresponsibly long, and so like long isn't leverage. Right. Long is a time frame for me, and it's like, to me, if I'm long Bitcoin, I'm incredibly long Bitcoin. I think this is the best asset ever created on the planet, and I'm incredibly long the largest company that holds the best asset on the planet. So that's like the way I think about it. So I think, there are a lot of people that over the last couple of months have gotten, slammed on leverage, which is a tough place to be in. I'm trying to take a guess on where this goes in the short term, which is a very tough position to be in just in general. I mean, there's so many players and traders in this game. The fact that MicroStrategy has been a top 10 publicly traded equity by volume over the last like 50 trading sessions in a row is just totally insane, because it's like the 120th largest company by market cap. So yeah, it's long to me is a long-term hold. None of this is financial advice, but I think of it as a long-term hold that's bullish Bitcoin.
I think you've also got to
go ahead.
You got to ask yourself, what else do you want to hold right now? Right?
Opportunity cost of capital.
Opportunity cost. But so you look at things like Bitcoin, and you can't be a believer in MicroStrategy without being a massive believer in Bitcoin, right? I think that's foundationally where everybody needs to start the journey for this one. And Bitcoin's still my biggest position, right? I mean, MicroStrategy closes that gap quite a bit, pretty regularly, but that was the foundation of all my investing in this space, was focus on Bitcoin. That's the transformational asset. You want to participate in that one directly, not financial advice, but you should own some Bitcoin. MicroStrategy is a different evolution, and you got to know what you're buying, right? I always tell people you have to have the fortitude to hold MicroStrategy long term because it's going to test you, and it's going to test you pretty much every quarter of the year, right? If you look back through 2024, pretty much once a quarter, we had a drawdown that was at least 30% in MicroStrategy, right? That's volatility. And every time it happens, you get all the panic and it's over and it's never going to come back. And fundamentally, that's just a misunderstanding of what you own. Because if you own it, you might go, crap, I didn't time this very well, right? You try to play the cycles. Maybe you're a covered call seller at the peaks and you're trying to limit your downside exposure. Or maybe you're a seller at the peaks and you're trying to buy it back lower, but you're not going to be able to time things all the time. And very rarely, if everyone could time an equity, we'd all be super rich. But the problem is this one's going to turn on a dime, right? And this one's gamma driven, and it's gamma up and it's gamma down. So you're going to shoot and you're going to slam, and you've got to be ready for that ride. And you've got to have enough conviction built up that foundationally that this is the design of what I bought. And this is what gives value to the thing that I bought. And once you understand that and you understand the mechanics driving it, right, when you start to get a sense of the size of the derivatives market here and how that impacts the movement on the equity and the impact of the leverage that MicroStrategy is applying, trying to enhance the volatility, once you really grasp that concept and you understand the incentive structures of all the different people that own the asset or some derivative of the asset, you can get far more comfortable in a long position because you know that this thing doesn't do anything flat, right? It's going to be moving up or it's going to be moving down. Very rarely are you going to see this thing go sideways. It just doesn't, it's not the design, right? This isn't designed to be stable for very long. And so as long as you do the education, you build the education to understand that that's what you own, then you can decide what the sizing looks like in your own portfolio, right? And you've got to measure that. You got to have an honest conversation with yourself about how much volatility can I truly mentally absorb? Because it's a rough ride sometimes. I mean, my portfolio is wild. I mean, people would look at how volatile things are here and you can hardly talk about it with some people because it sounds so risky what you're doing, but you're like, yeah, it's what it does. Like it's up, it's down. It's what it's going to do. It's going to move. That's what I like. But once you get to terms with that and you go through a few cycles, and that's really what brought me into studying it so much, was I'd allocated my own capital to it. I watched it basically evaporate overnight, and I had to figure out, did I just buy into some scam here where I'm going to get screwed, or what did I buy? And so for the last year, I've been spending all this time on X and just, you're watching me publicly work through the thesis here and really understand what the strategy is, because it's important to me to know what I own. And early on, I didn't know what I owned, right? I thought I owned, just the traditional leveraged exposure to Bitcoin, but it's so much more than that. And you really do have to sit down and focus and digest content to understand. Otherwise, every time it goes down, you're going to assume it's over. You're going to sell. It's going to run again. You'll buy back at the top because you'll think it's never coming back down. And then it'll turn on a dime and you'll be down again, right? So you have to build that conviction and that understanding of what it is you own, because it's not a normal stock. It's not like any other equity that you own. So that's my rant on it, but I think it's important for people to hear it.
And that's why just buying and holding and not trying to trade something that you cannot predict, and dollar cost averaging. If you're solvent, you have an income, you can take a position to start off with because you have conviction, and then you can dollar cost averaging as you get your paycheck. Jeff, you look like you had something there.
Yeah. I mean, I think Ben explained it really well. It all comes down to like how you want to design your life as well, and like what kind of volatility you can stomach. And Bitcoin holders are the most hardened holders in the world, right? Because they've weathered the storm of multiple 70-80% drawdowns over time, and then continue to hold it for like a long period of time. And now you pair that with an incredibly volatile asset like this as well, and you have one of the most hardened holder base out of any equity ever on the hardest, on the company that owns the hardest money, more of the hardest money than any other company in the world, right? Like this isn't GameStop where, you know, people are diamond hand holding, you know, shares that have decaying real estate, selling video games, right? It's a completely different dynamic. And for me,
Yeah.
I think about, like, Ben, you often say the Bitcoin that I hold is like what helps me sleep at night, right?
The
It's
most
like
peaceful part of
it's
my
the most,
portfolio.
yeah,
I
it's the
don't
most-
even, I forget to look at it for months at a time. Like
Yeah.
it just, I'm so not worried about that piece. And the rest of my portfolio is so volatile
Yeah.
that I don't even have to pay attention to the Bitcoin. I know it's there. I know
Yeah.
how much I have.
Yeah.
It's very peaceful once you get used to that. You know the trajectory it's on. You see the shifting winds going into its favor finally. Like it's not something I'm going to spend any time being worried about, right? Which is the best part about Bitcoin for me. Once you know what you own, you only panic because you don't own more of it, right? So what you do have, you don't tend to worry about because you don't see the world getting any less crazy. I don't see any drastic fiscal responsibility showing up in the government anytime soon. So,
Well, we'll see.
yeah, well, we'll see. But
Good. I
if
like
look
it.
at that, and if you've got this major debt problem where you got, debt to GDP climbing up to 130, and you look at what that actually means and how they're going to have to resolve that, well, you're going to have to devalue the dollar somehow, right? So that's coming. It's not like they have this growth button they're going to flip that's going to drive all this growth into the economy to offset the shortfall that we have, right? That's what's supposed to happen. You're supposed to have corresponding growth with the debt you're taking on so that you can manage it. But we haven't had that for a while. So that's all I need to look at to feel really comfortable owning Bitcoin. I just have to count on the incompetence here and that they screwed this up so bad for so many decades now that the dollar is going to ultimately have to pay the price. And because of that, I'm not trying to hold much of it, right? People used to look at cash as being this very stable, like, this is my bedrock. I've got the cash here to pay for things. And if you're holding cash now, all you're doing is accepting the certainty of loss, right? $1 isn't $1 anymore, right? And every month it's going down. So if you're holding anything in cash or even having it sit in bank accounts, you're just, your risk-free, quote, rate is certain guaranteed loss. Like, Anders, if I was going to lend you $5 and you told me you'd give back $4, I'd never give you $5. It's not a transaction I would make, right? But that's what's happening to people's value. And so when you come around to understanding what's going to drive the increase in price, right? Well, look at the denominator. Look at what it's being valued in today. You're always asking yourself, going up in price against what? You have to know what the denominator is. And for now, and for the foreseeable future, the denominator is going to be the US dollar. So you've got two sides, right? You've got Bitcoin increasing in value, but you've got Bitcoin increasing in value based on the other pair, the US dollar. And since the design of the US dollar is to have managed inflation, right? Guaranteed loss. That's what you're accepting. But if it's only going down, where Bitcoin's going, and it's the only truly finite asset that we have right now. And it's this pristine digital capital that the world's about to figure out how to utilize. And that's going to be really awesome to watch for the next 5 years.
It's the vacuum on the other side of the balance sheet that's sucking up all of that extra liquidity.
It's getting closer to the black hole. It's pulling it in faster and faster, right? I mean, I think you'll see them adjust and go, we used to say 2% was good. Really, we're targeting 3 to 4, right? Which is just going to be an admission they've lost control because now they've taken out all the categories. Like when you look at CPI, sorry to go on a rant, but it kind of pisses me off a little bit. When you look at CPI and they're just manufacturing these numbers, they're like, well, here's the inflation rate if you don't need to buy food or use utilities or put gas in your car, right? As long as we ignore all the things you need in your life to live and function day to day, if we just back all of those out, then we're managing a nice steady 2% loss in the value. It's all games. As soon as you decide to personally exit that game and go, I'm not playing, right? you get really confident in what the outcome is going to be long term. So that's why it's become the most peaceful thing that I own. I don't have to worry about it because I know they're going to do exactly what they say. They're chanting for victory if they get 2% loss in value per year. For some reason, that's a win. So, I feel very confident.
There's something I want to ask you guys about, because I think this is the last MicroStrategy Mondays before that big options expiry is happening on, is it Friday or Thursday, Jeff?
Yeah, it's Friday.
And ever since I started watching Quant Bros, you were talking about that. But what's the take now? Do you think it's moving the price or anything that's happening, or?
Man, it's so tough to say. I think it's pretty historic in the fact of how many options are deep in the money, and the incentive to exercise the options that are deep in the money is there's much higher incentive to exercise than there is to sell those options and move to something else with different opportunity cost of capital. So I mean, it could go either way. There's pressure on both sides of this thing, right? There are traders. There are so many people that are involved in trading the stock. And that's the reason that it's got the highest volume, top 10 highest volume traded, because every single option expiration and every single strike price on both sides, put and call, there are trades happening every single day on all of those. So like, market makers are using leverage. There are people that are buying leverage using puts, calls. Like the volatility is being sold and traded significantly over time. So it's really tough to say on, if there's going to be a huge spike or a delivery, fail to deliver of shares moving forward. So it's so tough to say. I mean, we haven't experienced anything like it before. It's not part of my, it's part of my thesis, right? Because these people are going to be holding these shares into perpetuity in the future. And these shares are likely not going to move hands anymore, as opposed to them being held as options positions and, market makers have control of them. They're going to shift into holders' hands, and they're going to be holding these positions for long-term into perpetuity. So if anything, I think it's moving from, semi-certainty to certainty, and that will be good for the stock long-term. So it's part of my long-term thesis, but, it's just so tough to say like whether or not there's a huge move in a short period of time. Josh Mandel, on the other hand, I mean, he's got perspective. He's like one of the last human market maker traders out there. He's out there trading with bots and algorithms daily just for funsies. And he does it better than anybody else. So, I mean, he's got a thesis that could be, we could see a lot of volatility at the end of the week, and possibly even next week as well, just as the craziness settles out in terms of who's exercising, what's exercising, where the shares come from, whether or not those market makers are hedged. If the price moves quickly on Thursday or Friday, anything that's at the money or near the money can start to, simulate a squeeze. It's tough to say, but I mean, this is what happened. This is what happened with the Tesla stock. I mean, with the Tesla trade, you kind of had this infinite gamma squeeze where people were holding on. Retail traders, investors, hedge funds were stronger than the bears. The bulls were stronger than the bears. And that kind of initiated this infinite gamma squeeze, which has really thrusted Tesla into its position that it's in today, on top of getting significant positions in these large ETFs like the S&P 500. And MicroStrategy is poised with the adoption of FASB fair value accounting to be included in the S&P 500, which can just, exacerbate the buy side pressure on this, and it's in my mind, again, no better opportunity cost of capital for 2025.
I agree. Also, another question I have, again, as I said, because of recent events, I haven't been on top of MicroStrategy X and what's going on. But the last I heard was that earnings call is expected 4th of February, approximately. I don't know if it's official yet. And if that is the case, then we expect that there's no hitting the ATM for 2 weeks up to. So from around the 20th. Without an ATM where a sailor can take advantage of that strong increasing demand in the stock, the price might be able to run a little bit on the stock. What's your guys' take on that?
It's possible, right? You never know. There will be a blackout period.
Are you
for
muted, Ben, or
I don't think so.
Oh, I can
Can't
hear
me.
him. I can hear him.
you can hear him?
Yeah.
Can you hear me now?
Damn, what happened here on my side? Keep going. I got to figure out what's going on here on my side. Keep going.
All right. Yeah. So it's possible, right? There will be a blackout period. It's traditionally going to be a minimum of 2 weeks, right? It's set by the company themselves as to how long that period is going to be, and a lot of it depends on the materiality of the information that the company has to put out. So I think we'll see at least a 2-week blackout period, which will be no ATM usage. Whether that results in a price bump, I think that largely gets driven by what Bitcoin's going to do during that same time period. So you could see a scenario where it becomes this circle where MicroStrategy gets an offering going quickly. They start buying Bitcoin during that blackout period, and Bitcoin price starts running. Therefore, the share price starts running, and maybe you get some of these gamma events that start pushing things up. We'll have to wait and see, but we're pretty close to a blackout period now, if not already in one. Right, this announcement that we just got could be the last of the ATM usage here for a few weeks. So we'll have to wait and see what happens. But you can never necessarily count on it, but you at least know that for a few weeks, if the price does go down, you're not going to be able to blame the ATM for at least the 2 weeks leading into it. So that's something.
That's funny, yeah.
I outside of the blackout period and just thinking about the design and the structure of this 21-21 plan, it's also I'm under the assumption that and I think Saylor mentioned this, and he mentioned that once we're finished with this plan, we will move on to the future plan. And so, right, I think there's about $6.5 billion of ATM left to be used throughout 2021. That means they've already used 15 billion of it. Right, 3/4 of it is already gone, and that means they've got to use the $21 billion of convertible debt before they can, establish a new ATM, or at least that's part of the plan. We could be wrong. I mean, they may be able to set up another ATM in the interim. But effectively, what they've done in that process is they've cleared out the balance sheet. They've dropped their leverage to be able to accept and put more convertible debt on the balance sheet, basically lever up their balance sheet. And once they start to lever up the balance sheet, every piece of convertible debt that's issued, the excess volatility and the excess downside. So the excess upside and the excess downside is delivered to the equity holders. They basically take on the risk of the excess upside and excess downside. And if equity holders are bullish Bitcoin long-term, you're happy taking on that excess upside risk because you think the downside is zero, right? Your downside, this is the hardest money ever created. My downside is zero. That excess upside almost feels free, at least to me as like an equity holder. Again, no, this is financial advice, but so the equity holder gets the benefit of taking on that excess volatility, which is unique. But can we go back to inflation for a second?
Absolutely.
Because
as long as you eat dog food, you don't have to worry about it, right? Someone said.
Oh my God, that's savage. So I'm just thinking about like macro landscape and the people that exist today and who's buying equities and why they're buying equities and why people do the things that they do. And everybody's experienced this surge in inflation over the last couple of years from 2020 to 2023, and it's their first. For many people, including myself, it's their first experience with inflation ever in their entire lives, right? Like I've got this inflation CPI index like pulled up next to me. Wild inflation really hasn't been around since the 70s. So
yeah, I was going to say, don't you remember the oil crisis in 72? But okay, I wasn't there for that either.
So you think about anybody that's emotionally gone through a high inflationary environment. They're 70 plus years old, right? So many of the people today, we've experienced this huge inflationary environment, and now like inflation is stabilizing. There's kind of this new baseline. Now, worst case scenario is you have inflation start to surge again, and people go, "Holy fuck!" Right? Like what? I just experienced this for the first time a couple of years ago, and that was incredibly painful. How in the hell do I afford, all of these things into the future? And you start to panic and look for, solutions to managing the inflationary environment. And I think we're poised to see that, really. I think a second surge of inflation here, it's kind of scary to think about, but right, we've seen the Fed has eased up on interest rates. The federal funds rates have been coming down for 6 months now, and the market response has been, "I don't believe you." The yield curve, the tail of the yield curve, has been going up. So Fed funds have been going down. The tail of the yield curve has been going up, which is effectively the market saying, "I don't believe you, and I think inflation is sticky and going to be here for the long term in the future. Like, you're going to raise interest rates at some point in the future." So I think we're also experiencing inflationary events, right? Like this wildfire that we just had in LA is going to be an inflationary event. It's going to take 12, 24 months before we start seeing the impacts of that in the market. But think about anything, high quality windows, high quality appliances, wood, marble, like all of these things to rebuild these fancy homes. There's going to be a huge demand surge on these things. Cost of insurance in California and across the US is going to go up drastically. And I think that is going to cause people to become a little bit more concerned, and a little bit more strategic about how they manage their assets and how they protect themselves against future inflationary environments. So,
how long do you think before they have to kick insurance out of the core CPI measurement, Jeff?
Yeah, is it already in the core?
It's in there. Yeah, I think.
Is it in there?
Core.
Man, it's probably coming out soon, because I mean, California is on the verge of an insurance nightmare. I mean, this thing is close to being uninsurable. The political infrastructure has prevented insurance companies from being able to, offer appropriate rates for the risk. Nobody's buying it. You've got a fair plan that exists, the residual market that exists, that's on the verge of potential collapse, depending on the outcome of this. The reinsurance market is scared to offer any coverage in the California marketplace, but just because it's too volatile, and opportunity cost of capital is so valuable elsewhere. Like I'd rather write Florida risk today than California wildfire, which is just crazy to think about.
So volatility is not vitality in the insurance market?
Not in the insurance market, no. And
it's worth a try.
Yeah, it's just not. The insurance companies just won't buy it. And it's like, I literally can't buy it. I can't charge enough upfront to buy the reinsurance that I need to buy. And it's just crazy to see these things. And then on top of, the debt to GDP, you've got all of the bonds that were sold in the last 5 years. Those are going to start rolling over at higher interest rates. So the interest cost alone on the debt is going to start rocketing and getting higher. You start zooming out and looking at the whole equation, and it's just really difficult to see a situation where we don't experience at least a little bit more inflation beyond this 2% expectation. And I'm sure the Fed is looking at it too, going like, how do we manage this? So it'll be interesting to see. I think there's going to be a lot more volatility just in markets in general. The last point I wanted to make, it's become very clear that real estate is not very durable, right? It's like very clear. But you know what is durable? The laws of math, right? Bitcoin is foundational on the laws of math and incredibly durable because of laws of math. And you can't break the laws of math. And it's surprising to me that insurance companies don't get Bitcoin, because the only reason they exist is because of the laws of large numbers, which is math laws. And I think eventually they'll start to understand Bitcoin is law of large numbers, and it actually fits very well.
Yeah, it's going to come around. Look, not to get political, let's just I'll keep it on an insurance level in terms of why it's hard for you to reinsure California fire when you have a mayor that saves $17 million on the budget in Los Angeles County for the fire department, and she's being warned that if there's something big, it's going to be a problem. Now this was big, and now people's houses burned down, not only because of that, but also they hired a chief that with a limited budget had a budget, allocated money to inclusion programs in the fire department. I'm just like, you see why I don't have a lot of hair? Because I'm just like, I've just been pulling it out. That, and then just not filling water in the reservoirs, right? And then Bernie Sanders out talking about, like, if people don't understand this global warming with all the houses burning, then you don't get it. Well, maybe if you focus on the resources on putting out fires instead of making sure that there's people of different colors or sexual orientations in the force. But that was just to talk about why reinsurance is difficult in California. That's all. That was an insurance, not political.
Yeah. It's I mean, it's a complicated equation, right? Like, I mean, it's just expensive. It's incredibly expensive to manage, even to manage a forest, right? Like if you wanted to thin out a forest, I've actually looked at a deal where these people were looking to thin out a forest in the winter. Okay. So they were going to go in and they were going to clear brush. In order for them to operate their business to clear brush, they had to get insurance just in case they started a fire and people's houses burned down. And nobody would insure them to clear the brush. So now it's like these businesses want to go out and do this stuff, but they're like, nobody's willing to take on the risk that they actually go out and like start something. So you just have this like huge complex problem that like everywhere you go, every piece of it, like insurance, politically, like taxes, real estate infrastructure, like everything in California is like this kind of little ticking time bomb where every piece is just really challenged. Like the utility companies even as well. I mean, there's this law in California called inverse condemnation, which basically makes the utilities liable for every single potential wildfire event possible in California. And like the concept behind it is like, let's say you have a farmer in his backyard, right? And he's using a hammer and he throws his hammer and it hits a utility pole and starts a spark and starts a fire. It's not the farmer's fault for using his hammer. It's the utility company's fault for having infrastructure in your backyard. So that becomes the utility company's wildfire, not the farmer's wildfire. And it's just like everything in California, it's just super complicated. And I don't think people really understand like how nuanced and complicated the whole system is. Yeah.
That's true, and it does sound complicated. Jeff, I know you have a hot
I gotta run
back, and if you gotta go, you gotta go, and that's I want to respect your time because I do want to see you back. And also I just want to say, like, both of you and Ryan and I like through these fires that we're talking about now, and me like having to evacuate, and like I only feel like strengthened relationships with guys like you that have been supportive, and just like words mean a lot. So I appreciate it. Thank you for your time today, Jeff. I hope you can make it on Monday.
Yeah, absolutely. Thanks, Anders. Hey, stick in there, hang in there, man. It's gonna get better.
Yeah, it's only a home I don't have. Otherwise, I'm good.
It's only a home. Oh my God! But you're gonna have a great future in front of you, and hopefully you get some travel and hang out and have some fun during the bull market. So,
absolutely.
Yeah. Cheers to Bitcoin.
Absolutely. Thank you.
Cheers to Bitcoin. All right, man. We'll talk to you later.
Cheers to Bitcoin. Yeah, talk to you later. Yeah, Ben. Speaking of, you were talking early on about the volatility in your portfolio, and I was thinking, I actually diversified my portfolio last year to kind of deal with some of this. I now have both Bitcoin and MicroStrategy, so I just feel like I'm a little bit more rounded and not just one-sided on Bitcoin.
It's the new age value portfolio, right? You just want hard digital value. You don't want dividends given to you by companies that are admitting that they've given up on any prospects of ever growing again. So seems responsible to me.
Sorry for the coughing. I got sick on that last ski trip, and Monday was just terrible. Still in bed. Tuesday I got up, went for a walk, and then I think like 10:30 or something, the fires broke out. But luckily I was much better, right? So I only have just coughing. The coughing keeps going anyways. But you spoke about dividends. You just mentioned the word dividends, Ben, and and that's part of the preferred stock, as I understand. But where does those, are they expecting to get dividends, or is it just something that they like legally would be entitled to? Because where would those dividends come from? How's that structured?
Yeah, so they'll definitely get dividends. I know that you've seen a lot of noise on the internet about, well, they'll just command 0% on the preferred. Very unlikely. Very unlikely. I actually think that you're going to see a very respectable rate on the dividends, like something to the 7-8% range, where they're going to create a really good. That's funny. People
Ben,
are great. The internet's amazing. I love it here.
Internet is amazing. The chat is usually lit. It's awesome.
It's the only place to be. But what they're doing with the preferred is they're basically stepping down the volatility another rung from even where the convertible bonds are. So to do that, you got to have a couple things, right? You really got to create an instrument that performs as a fixed income instrument across a long period of time to flatten that volatility out. You need to make it so that the equity component doesn't kick in as early as it has on the convertible bonds. So that means a couple things. One, you want people buying the preferred stock because it's paying out that fixed income component, right? The dividend. That's what's going to attract these big pools of capital to this public offering. So I think you're going to see it 7 or 8%. Then they've got to engineer a long time period where that fixed income payment is going to be in place, because you want whatever that conversion price is to be very difficult to reach. So I think you might actually see something like a 150% premium on the conversion price. So say the stock's at 350, that would mean that the conversion price might be at 875. And then from there, the early conversion triggers another, it's 130% of the conversion price, which is 1137, something like that. So the stock price really has to move. And the intent of that is you want that price to be further out of reach, because you want a longer time period for that product to act like a fixed income product. That's what's going to flatten the volatility on that product out. So the structure is going to be different. But the other thing that you have to account for is, because they're raising capital at that 150% premium, initially it makes it wildly accretive to Bitcoin per share, right? Mathematically, it's a home run. But what you have to factor in is, at a 7 or 8% dividend, they're paying $140 to $160 million a year in dividends. So the next natural question is, well, where's it coming from, right? The business doesn't throw off that much cash. So
that's why I come to you, Ben. That's why you're on the show.
The reality is it's going to come from the equity, right? You're probably going to have to raise that through ATM. So the ultimate, in the end, the Bitcoin per share increase, or the Bitcoin yield that's going to be generated, is going to be a combination of that premium less whatever they have to issue to fund these dividend payments. So the math that they're going to have to do is going to have to make sure that in the end, they're going to end up in a more accretive position than they would if they just issued a straight convertible bond, right? So they've got some wiggle room because you've got 150% conversion premium, right? So now say they took 25% of that to use equity to fund the dividend payments, you may still end up way ahead of what you even get on the convertible bonds. But it's going to be a tough one to message to the market in terms of how you do it, because people aren't going to be able to understand. And when you first give your announcement saying, here's the Bitcoin yield we've generated, that's not the end Bitcoin yield, because we don't yet know how it's going to play out over years. The bet is that the stock price continues to rise significantly, so they have to use far less shares to fund those dividend payments. You're also going to get things like these convertible bonds start rolling off, the ones that are carrying coupons. So they'll probably get back to having about 60 million a year in free cash flow from that. So they're really plugging that gap as long as they can keep getting 0% on the convertible bonds. So the structure is going to be really, really interesting. And part of that flattening of the volatility is they're going to have to essentially, I'm going to say guarantee, but I'll tell you in a minute why you can't use that for preferred stock. But they're essentially going to have that no call period probably be something like 5 years before they can get out of this. before MicroStrategy would be able to force the conversion if it hit that 130%, because the buyers are going to want to know that they've got a long time period where they're going to collect these dividends, so that they're treating it as a fixed income instrument. So, but the reason you can't say guaranteed on the dividends is because guaranteed dividends create liabilities that impacts your leverage ratio. They have to be discretionary dividends, right? They're intended to be paid, but they can be suspended if they needed to be. That'll probably be the structure in the end, but it's going to be really interesting to see. I'm looking forward to when they release it. I was hoping they would release it, this week or even last week, just because I want to see what they're doing. But those are some of the things that they're going to have to really consider here. And they're going to have to get their messaging down so they can kind of model out the expected Bitcoin yield out of this, because that first transaction isn't going to be the whole picture. So this is probably a one-time preferred dividend for now, or preferred stock offering for now, because they're going to need that dividend payment. So this isn't something they can come back to the well all the time. This is probably like a once every, 3 to 5 years, depending on what they set that no call period at, that they'll be able to do these. So they've got to be very careful with how they structure these things, and then how they message it to the market.
So definitely note to self, when Ben starts an explanation, don't even look at this chat for 10 seconds and you get back on track. I'm going to have to watch this last episode, this part on YouTube, because I do want to hear that explanation. But what is it? Is it 2 billion that they have announced that they would do in Q1 of...
Yep, 2 billion
Gotcha.
preferred offering. And I don't think it's going to be like the converts where it gets upsized, just because they've got to build in some expectations around the dividend payment. So depending on what that interest rate needs to be for the market is really going to determine. So I think 2 billion is probably actually going to be where they end up on this one.
Right, which isn't a lot compared to the convertibles and the ATMs budgets kind of thing, and that's because of the dividend part of it.
Yep.
Yeah. So what do you think we'll hear about in the earnings, the Q4 earnings call early February? What do you expect is the direction, or I mean, Saylor already said that they want to lever more up, that there's too little debt compared to assets right now, as we spoke about earlier. So I guess we are expecting more of convertible bonds compared to ATM in Q1, but like, what's your thoughts on that?
Yeah, that's 100% what we're going to see. I think the Q4 call is going to be more, they're going to focus more on the recap of all the success that they had in 2024, because I don't think they're pivoting in strategy yet, right? So you'll get that update on where they're at in the 21-21 plan. And while they ripped through the ATM pretty hard in Q4, we've still got 58% of the plan left to execute on. And the bulk of that right now is in the fixed income side. So I think at this stage, they can start to be a little more opportunistic with the ATM usage. And I'm expecting that they'll probably spread that out maybe over 3 quarters. So maybe it'll be 2 billion a quarter, or they might even hold off, right? Depending on what the market conditions are. But I don't think they have to rush anymore, because I think that they've created enough space to start executing on the fixed income side again, because of all the usage that they had in Q4. So I do think that we're going to see that pivot. The ATM is going to become less of a factor here throughout the year. It's going to be tough to get through the full 21-21 plan, right? I think that they are intending to be done with it by the end of 2025. I think that's probably the target, so that in Q4, they can announce whatever their new plan is going to be going into 2026. But it's not as easy as people think, because there is a risk tolerance here that MicroStrategy is operating within. So when you look at, like, they'll only really actively lever up to 25%. They're willing to accept a leverage ratio up to 40, but that's really more intended for, bear markets where that leverage will creep up because the fair value comes down on the Bitcoin. So they're going to raise it up to 25%, but that means that, one, they need to acquire a lot of Bitcoin, which they're going to do with these fixed income offerings. But then once they acquire it, they need some help from the Bitcoin price to create the next tranches of space to get it all out the door. So if they've got 18 billion left on the 21 billion of the fixed income side, They're going to use 2 billion of that for the preferred. So you've got 16 billion that you have to deploy. And I think that timing is going to be important to them. So I think they're going to try to get as much out in Q1 as they can, which will probably be, you'll get the 2 from the preferred. You'll probably get at least another 6 out of the convertibles. So that's 8 billion in Q1. And the reason I say that they're probably going to rush for that is I think that they're hoping that 2025 turns into one of those really bullish years like we've seen in the past 4-year cycles. And if they get those bonds out the door in Q1, they could be eligible for early conversion as soon as Q3 of this year. So you could still roll that debt off the balance sheet before the end of 2025 and before the bull cycle peak, which would put them in a great position if they have any thoughts that a bear cycle is going to follow this, right? If they still think we're in somewhat of a 4-year cycle, they might be able to basically wipe the ledger clean going into the end of the year and be in a total position of strength to start rebuilding their ladder throughout the bear market. So I do think it's going to be a little tactical in terms of how they approach this, but I'm expecting them to get as much fixed income done in Q1 as they can. It'll probably be 8 to 10 billions, my guess, which would then put them they'd have 6 billion left on the fixed income side. You'd have about 6 billion left on the ATM side. So they're back in balance. And now they can start using the ATM more strategically to create any space that they need to get the next offering out the door. They can kind of accelerate it if Bitcoin's performing alongside of it. So tactically, that's kind of what I see happening here. But we'll have to see how it plays out. I don't know what the messaging is going to be. I'm looking forward to hearing it because they had a ton of fun on the Q3 call, right? I'd never seen Saylor smile and, be in as good of a mood as he was on that Q3 call now. So we'll see. We'll see what comes out of it. But I don't expect anything really new to pop out because I think he is committing and trying to give shareholders a little bit of stability here, saying, we gave you a plan. We're going to execute on this plan. Yes, we've hit one side of the plan too heavy, but one feeds the other. And so now we're going to flip sides and we're going to go on to the fixed income side and we're going to hammer that really hard Q1, Q2 to make sure that hopefully with some bull market help, we're in a really great position exiting 2025.
Beautiful. It's definitely gonna be so the price of Bitcoin right now is just hovering around $94,000-$95,000. And as you were talking about, we kind of need it would be very useful not only for Bitcoiners, obviously, but for MicroStrategy if the price would actually start to run a little bit. And that's another thing. I'm talking with some of my MicroStrategy friends about that are both Bitcoiners and MicroStrategy, that once you start owning MicroStrategy, Bitcoin becomes a little bit boring. It's just nothing is happening, right? But how useful it would be if Bitcoin actually start running to 120, 125. It changes the balance sheet of MicroStrategy and opens up just further opportunities to do convertible bonds, to take on debt at such phenomenal conditions and buy more Bitcoin, and then Bitcoin price runs again, and they can take more on debt. And it's beautiful. That doesn't mean that there won't be bad times and bear markets. And personally, I do think that October is the most likely top for this bull run. I do believe that Bitcoin will be much higher in October than it is now. I think it is the more likely month for a top. And depending on at which level nation states start buying, aka Trump and strategic Bitcoin reserve, and potentially other countries, Russia, Saudi, UAE, etc. If we really have a nation state FOMO competition of getting to as much Bitcoin as possible, then we might not have a bear market. It might be canceled. But otherwise, I've just seen so many times how psychology just plays out the same way in the markets. And we are gonna, if the price runs of Bitcoin runs to, let's say, 300,000-400,000 near the end of the year, there's going to be people that come in, they don't know what they're buying, they don't have conviction. So when it falls, when there's a correction, they panic sell and it avalanches down. So You'll have people coming in with leverage going like, oh wow, I can get like super rich in 3 months. Just like let me lever up to 2x, 3x, and they get wiped out and create that negative selling. If it just every time, like that's why it's a 4-year cycle.
It is. The difference is, and you actually really hate to see some of these 4-year cycles, because what you're kind of witnessing is the rotation from retail to institutions, right? During those periods, the people that are going to be panic selling or expecting a 4-year cycle, is a lot of that's going to be retail. And that means retail's giving up some of their coins. And who's the buyers on the other end, right? It's the buyers of any price. It's the companies like MicroStrategy. It's going to be all the copycats that enter the market here throughout 2025. So I don't love to see the cycles, because it does represent that shift of ownership of this asset. And I think it's really important for individuals to own and participate in this network, in this asset. But I agree that we probably get some level of a cycle. My view is it probably gets really muted compared to the past ones, because I don't think that there's nearly as much retail availability of Bitcoin to be able to sell this time. So I think it's going to get a little bit dwindled by the new buyers that we're seeing show up in the market today. And that may result in us getting significantly reduced drawdowns. But it does, people will try to front run a cycle because it's been so predictable in the past, but I'm not sure I still see an 80% drawdown in the future here, just because of the size of the buyers we have and all the wild cards that are out there. Like you said, with nations, that becomes a strategic play, right? It's almost defensive on the part of most nations. It's you have to accumulate because all the other competing nations might be accumulating and not saying anything yet. And can you take that risk? That's a different kind of buyer, right? So that does change the dynamic a little bit, but ultimately we'll see what happens, right? We don't know. It's been really predictable for the past 4 years, but the past doesn't guarantee the future. So for me, even if we get a 4-year cycle, it's not going to matter, because I'm going to hold on to my Bitcoin. I'm not going to sell out to try to trade some cycle, because I know what I own. I'm not trying to get rid of it. So I'll ride it out.
Yeah, but to be honest, I would love to see a bear market next year. I have to admit, it just may not come, but I want to make some of those call option purchases, the leaps that Jeff has done, and some of the other boys, Ryan, you know, at near the end of 26, where you can do those 100x returns. I would love to be able to pull that off. Yeah, if we don't have a bear market, that's not going to happen. But so it's kind of a good thing, because either a bear market happens and there'll be opportunities like that, where we know, you know, even though the sentiment always is so bad in the bear market, and so many people that didn't study what they bought, they think it's the end of Bitcoin. We know from having studied the thing that it's going down. It's great, because there's going to be an opportunity to go long when we're near the bottom, and you can never hit the bottom exactly. So that's one scenario which I would love. The other scenario is that the Bitcoin I bought, the MicroStrategy stock I hope, keep going up. Well, that's a pretty good scenario as well. So
yeah,
it's almost a win-win.
Heads you win, tails you win, right? It really doesn't matter all that much. Like Bitcoin, I don't ever recommend people trade their Bitcoin. I know people do all the time, but for me, that's a one-way street for me. It's accumulation, right? Because I know what I own, and I do believe that there's a really bright future where Bitcoin gets really integrated into the future financial markets, and just owning it is going to give you access to capital that a lot of people won't have, that you'll be able to use. So I just like to accumulate it. I'm not trying to get caught on the wrong side of it, because I know that there's all these wildcard events where there's no guarantee that I get to get it back cheaper, right? This might be as cheap as I ever get it again. And I don't like to play games with that, because I do think we're in a little bit of an arms race here to control the future of digital capital. And if you're an individual, you've got a chance by being early, right? My thesis is that everyone gets 2 to 3 opportunities in their life to be really early to something. And for me, I view Bitcoin as being one of those things, and being early to it and building conviction and not getting greedy with my accumulation strategy, right? Not trying to get cute and trade in and out and try to get, 0.01 more Bitcoin, right? I stay away from that because I view it as being so transformational to the world, for individuals, for corporations, for nations, that I just want to hold on to it at all costs for right now, right? Like, I'm not going to get greedy here because I think I've front run the major moves here over the last several years. I didn't front run it early enough, right? I mean, I had a chance. First one I ever bought was November 2013, and it was for like $260 or something like that. And
Woo!
yeah. Now, don't get too excited because, it went up to 1,300 or something. I sold it. I thought I was the world's greatest trader of all time. And now looking back, you're going, well, what'd you do that for? Well, I didn't know what I owned. And, I had the conversation with my dad. We were sitting there and going, we should buy 1,000 of these and just see what happens, and we didn't do that either. So, you try.
Imagine.
Well, he couldn't. He's regulated, so he couldn't do it. And I didn't have the money to do it, even at the low prices, because I was just out of college. But, it's one of those things where once you do really learn and you start taking the new knowledge you have and applying it to what your vision is of the future, you get really steadfast in not wanting to do anything to jeopardize that. And you just want to sit and let the future come to you. And if you're already in position, it becomes very peaceful because, again, if you can count on the other side of the coin getting ruined, if I can just count on the destruction of the dollar over time, then what else am I going to do? I'm going to sell out of my Bitcoin and hold US dollars for a long, no. I'm not making that trade anymore. I know what I've got. I'm not getting rid of it. So you ride out the volatility, right? You know what the value is that you hold. You've got the only finite asset where demand doesn't increase supply. You know what those dynamics do over a long time. And the rest of the world's just starting to wake up, right? We're still early, but we're not that early anymore. And now that all the big guys are showing up, you can start to feel what's about to happen when you get a flight to safety, and Bitcoin's going to represent that safety. So that part's very peaceful. That's why I don't have to think about it. I know what I got, and I'm just going to hold it.
And it's so beautiful. And that's the thing. We don't need to trade Bitcoin. We don't need to trade MicroStrategy. You can just buy and hold it long enough if you have conviction and understand Bitcoin. I mean, take some hours of studying in it, and that this is literally going up forever, Laura, as Sailor said so famously. But Ben, I know we're hitting the back end here. Again, dude, just good to see you again after it's been a few weeks since we did this show. Glad to have you on. Thank you for your time, and thank you for our conversations also about Christ in the DMs here during the last week. And it's been a pleasure, man. Thank you. I appreciate you and appreciate your time and the knowledge. And so many people, like right now, 11,000 are watching live, split on X and YouTube. You're helping a lot of people understand it better. Your rants are epic and well known. We love it. Everybody does.
I appreciate it. And I appreciate what you were doing, right? I mean, you're very publicly going through a rough time out there, and you gave people a different model that they could take to hardship. And I think that was a really powerful thing to do, to show people that, things can literally be burning around you. But as long as you maintain a positive outlook and you keep pushing forward, I mean, the resiliency I think you publicly showed people through this, and showing people what, your beliefs do in terms of guiding you and pushing you forward. I think that's an amazing message to put out to the world. So I appreciate you being public about that, because I know it can't be easy.
Yeah, it really started. I think the first that I posted was Tuesday after I got to safety. So this was Tuesday evening in Santa Monica Beach in a parking lot. As soon as I came down, I just went into the first parking lot, and it became perfect because they closed that off. Also you couldn't come back to that. So I was as close as I could be. So I sent some videos down from there, but I had recorded a lot while I was up there, like when I was in the middle of it. And then the day after, on the Wednesday, I had different friends asking me like what was actually going on up there. And then I thought, okay, do I want to post it or don't want to post it? And then I just thought, F it. I'm just gonna post it because then it actually answers a lot of questions from a lot of people at the same time, and it's fun for fun to definitely an adventure to look at it and then think about what I experienced while I was up there and I couldn't get out, and share it. And then, as Jesus said, if you deny my name, I will deny you in front of my Father. And I'm like, okay, this is an opportunity to share my my faith that maybe others could come to Jesus as well, which in my country is a bit of an unusual thing these days, I would say. And why not then use this platform and what I'm going through as a platform to bring the gospel and share the gospel.
Which is beautiful, right? I mean, characters shown during the hard times, not the good ones, right? So, being able to show that, and I was really glad to see, it's an opportunity for a lot of people where they roll over and they go, why did this happen to me, right? And it's very easy to wallow. I was really glad to see that, you were every bit the person I thought you were when you said, well, this is the time, God's given me a chance to make a new plan. So I'm going to make a new plan and I'm going to move forward. And I think that's just a beautiful message for the world. So thank you for sharing that.
No, thanks a lot, Ben. It means a lot to me when you say this. And yeah, as a Christian, a man of faith, I believe that it's all part of God's plan. So instead of saying this is really annoying, and again, I just want to highlight, I didn't get like there's a lot more people with a lot bigger problems than me, right? So I don't think I have a reason to complain. But being a man of faith and expecting that this is part of God's plan, instead of complaining about I lost the place that I lived. Again, it was rental. I didn't own it, but it was where I live, and I can't get something in that rental market now. I can take the same budget and get like nothing. Then I'm looking for, well, why is this part of God's plan? What will work? What does he have for me, and how can I help bring glory to Jesus? And one thing is he's I'm still alive. That's a good thing. So anyways, thank you for your time, Ben. I'm looking forward to have you back on, hopefully next Monday.
Absolutely. Appreciate it, Anders.
Thank you, Ben. Appreciate you, man. Bye. Thank you all for watching. Love the chat. Everything is good, life is good, and God is good. See you in the next one.